Financial Argument channel and subscribe to it. In order to support us, please do not forget to like our videos and comment on it with your own views. Finally, you can visit our website address, financialargument.net, and social media accounts for more financial news.
This video posted with permission. The financial and political opinions expressed in this video are not necessarily of Financial Argument or its staff. Opinions expressed in this video do not constitute personalized investment advice and should not be relied on for making investment decisions.
Well, kind of thank you for the nice introduction. If I can just add on, thanks. I'd say everything is pretty accurate with what you said, with the exception of I would consider myself to be all that great on the cryptos, but certainly more studied than most. And as you know, I just did a webinar for free and for fun for everybody, and I picked Bitcoin. The reason I picked Bitcoin is, I guess I could say clickbait. I got some trolls that were upset, but I could have chosen any market. I could have done the S&P. I could have done silver. I could have done soybeans. It wouldn't have mattered because markets move due to just really a couple of factors. It's buying pressure or selling pressure. But I use Bitcoin because so many people in the space are what I considered unwashed, unsophisticated investors. These are people that have never opened a brokerage account, may never open a brokerage account. They've never studied markets. They don't know how markets move. They don't know what the forces behind it. And they are, in many cases, what I'll consider first-time investors that are very lucky, which means, they bought Bitcoin and it was at, 200, watched it go to 19,000. Now it's sitting, I don't have the price in front of me today, but, 7,000. And they're up substantially, wishing that they sold at the high, but, they are believers it's going to 50,000, 100,000, a million, whatever. So I chose Bitcoin, and I watched the webinar to illustrate how markets move. And this is something that's true of all markets, including cryptocurrencies, and what's called overhead resistance. And I won't redo the webinar, but I do encourage people, especially those that are, let's say, still learning about markets and investing, to take the time. I think it's only 20 minutes. I can't get long-winded, but I try to make it succinct. Why don't you give me feedback? This is on the air. We didn't talk about it ahead of time. All you told me is you watched it. What did you think of it? Was it worthwhile?
Absolutely. We'll have the link in the description area regarding that. And it's so true. Markets just have a way of washing and rinsing investors, David. And one of the things that I think is important, I think we'll study what happened in cryptocurrency, especially in 2017, for decades and years to come, the psychology of what took place. And, I'd like to just ask you, going into this, new season, where your sentiments are regarding Bitcoin going forward in light of what has just taken place, and how you think, much of the sector is going to respond going forward. Is there, do you anticipate, a real surge going forward here? I know you talked about this during your webinar, but for people on the interview, I think this is very pertinent information. What are your thoughts on cryptocurrencies and just the nature of these markets historically going forward?
Well, my idea is a bit radical. First of all, let me just preface it with this. I am truly free market, and I'm always learning new things. And I've certainly changed my opinion on several things in my lifetime, and I've gotten stronger in some views and changed views. The point I'm making is that it's not my place to tell anybody where to invest, how to invest. As long as it's ethical, I'm okay with it. I am not a big fan of Bitcoin. My article of about 4 years ago, which is titled My 2 Bits About Bitcoin, most of the stuff I wrote in that article coming to the fore, meaning that I said, if it really gets traction, watch the government interference. I didn't forecast an ETF, but I said, governments don't like competition. I still have some doubts about the origins of it. I have access to the, I think it was NSA white paper talking about starting basically a blockchain or a cryptocurrency. And then InQtel, which is the CIA arm that funds startups in Silicon Valley, has a pretty good whack of Bitcoin from pretty much the initiation. So those two things put up a red flag for me. That doesn't mean that it isn't, a great thing for you. You can make that determination. I can influence you, but I don't really care to. I'm just giving you my opinion. You can take it or leave it. However, the basis, and I have a philosophical principle that I cannot shake. And that philosophical principle is that the whole monetary system needs to be based on truth, and it has to be based on something of value. And so the whole fiat system is based on a lie that we can create something out of nothing, and the bankers have that advantage, and they create the cognitive map, meaning they get everyone to think, or they're brainwashed in parlance terms and in direct into your face terms. They've brainwashed everybody into thinking that this digit that's on their bank computer that's accessed by a debit card or their phone actually has value. And as long as everybody buys into that belief, then the system will continue. And it has. With that foundation, what is behind a Bitcoin? Really nothing. I mean, yes, there's software in this, and I've heard all the arguments. Philosophically, it doesn't sit well with me because it basically a creation that basically is nothing. Now, you asked the question, I'm going to give you a long answer. You know me, I'll build you a watch. But it's important with the premise of what is the basis of most of the early cryptos. Now what you're seeing is a lot of, and I separate the crypto from the blockchain. There's a lot of blockchain-based asset-backed situations. So one I think most are familiar with, this is this the actual TEA from China that's on the blockchain. I'm involved with the silver-backed blockchain, reinstituting silver as money. Now, this isn't going to go from 2 cents to $297 because it isn't just a fiat, unbacked, sell it to the next person for a higher price system. It's based on the price of silver. However, it's also an asset-based blockchain. So I think the next step, Kenneth, is actually a move toward not only precious metals-based blockchains, but asset blockchains. The DRC has done one with cobalt. You've seen them for lumber, tea, as I mentioned, and a lot. So I think that's the next step. So I think the early phase, like in the tech boom, you're seeing the early adopters, and some of those will stay. Ethereum for sure, Bitcoin most likely, Litecoin, some of the other ones. Most of the other ones will go to the buy and buy. I mean, they'll just absolutely disappear. People that got into them that can't get out of them will lose money. And then the next phase up will be the blockchain that is tied to assets. So hopefully I answered that question. And I want your thoughts. What do you think of that? You think I'm right? Think I'm wrong? Or are you just going to wait and see?
Well, I nimble. I'll tell you that, and I'm very open to that, to being wrong, but I love what's going on with Bitcoin, and I'm open to value coming from areas that aren't so traditional. Some of the things that might be more intellectual, or the network effect, and maybe it's not something that we're gonna be able to trust for thousands and thousands of years, but maybe it's more of like a 50 or 100-year timeline. Because there's a lot of people who put their value in, let's say, Anheuser-Busch, and say, okay, well, I'm pretty confident that this company is going to do well. There's no guarantee about that, and there's no guarantee in anything in regards to our savings. But if you can stack the odds in your favor, I'm open to that, and I think there's a great deal of value that there is in the Bitcoin network. And I like that it's obviously pulled back to the degree that we can now purchase more. It was very difficult to purchase on the way up, and I was fortunate to sell a great deal of my crypto on the way up, and I'm happy to purchase here at these levels. I know that the Bitcoin ETFs are in talks right now, so I think there's a lot of opportunity there as the space continues to build out. So I'm very optimistic about that, but I'm always open to being wrong, which is also why I invest accordingly. I diversify, and I do my best to position myself in a way that I trend up as a whole. So.
Well, I'd like to add one more thing before we move on to the next topic. First of all, although I'm philosophically opposed to an unbacked thing, I could make the argument, two things I'd like to state. One is that God bless Bitcoin, because I'm all for alternatives and alternative currencies. So the one thing Bitcoin's done that I will applaud is it's got people thinking outside of the central bank controlled private banking cartels, mainly the Federal Reserve, and the Rothschilds, basically holding all nation states to their domain, meaning that the private bankers control almost everything. So there's competition, and without Bitcoin, I don't think you've seen much at all. So God bless Bitcoin for that. And the other part, if you are so philosophically inclined to say, well, look, there's really nothing inherently wrong with the fiat system, because even though it's unbacked, David doesn't know what he's talking about. And I'm happy with a system that's an alternative to the one that already exists, and you can sit with that philosophically, then be my guest. It's just, you ask me what I think. I'm pretty opinionated when I study something. Often people say, what do you think about this? I don't have an opinion. I haven't studied it long enough to form an opinion, or I'm still looking at it. So next topic, but thanks. I really want to get that out there, because I'm not trying to be in the middle. I'm not trying to do anything. But if there's one thing I could be really passionate about, is thank you, Bitcoin. You woke up the world, and we need alternatives, and we need alternatives that are based on, based on free markets and the people themselves. Now, again, to just digress back, I'm still suspect where the origins of Bitcoin really came from, but that's for someone else to investigate further. I'm still, aware of what I do know about it, but it doesn't seem to dissuade those that are pro-Bitcoin, and that's fine. They can do whatever they want to do.
Sure. Yeah, and it is a very powerful thing. And let's move on here. Talking about the economy, talking about that conventional wisdom and that sentiment. I mean, there's a lot to unpack in regards to the economy. The Fed did not raise rates, but signals more rate hikes to come. Trump has promised a 4% growth rate in the economy, and here we are. Things seem to be chugging along. Billions of dollars are being repatriated. And it's just such a difficult thing because as Austrian economists, you look at the numbers, the sheer raw numbers, you say it's unsustainable, but the sentiment and the belief that things are good continue to move forward, which keeps everything intact. It keeps the stock market intact. It keeps the US dollar intact, and it keeps precious metals down. So having said that, what are some of your thoughts on this?
Well, I agree. I mean, to pare it back a little bit, I mean, markets move on psychology, not on math. I mean, certainly you can get into the numbers and find the value investing, what Buffett does for the most part, but basically markets move more on psychology than they do on fundamentals. And that's something that's very important. So as you said, I was asked before Trump was elected in Canada on one of their main stations about, what do you think about the election? What do you think? What would happen if Trump got in? I said, first of all, I'd preface it with the analogy of the Titanic. The ship has already hit the iceberg. But if Trump gets in, steerage is coming up to first class. The band is going to play a lot more lively music. There'll be free drinks for everybody, and the party is back on, and everyone is going to feel really good. That was my answer. And that's sort of a good analogy still. I think there's a lot of feel good, but the numbers, even though we got this 4%, we're going to go through it in the Morgan report and probably put out a mid report during this month because of the length and breadth of the last report that just went out on the 6th. But it's a lie. I mean, the 4% is a number. And I'm a little, I'm not a big Trump fan, but he's certainly showing a lot of action, and he's really hard to figure out. But if you go back to the election, he talks about this is the biggest bubble. It's a bubble, and the numbers are fake. But now he's taking credit for the economy doing so well. Low unemployment here, low unemployment there. The economy's never looked better, and blah, 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 blah. Which to me is disingenuous to what he said on the campaign trail, because he was well aware in stating such that these numbers basically are, I didn't use fake numbers, but they are. So we're going to go through the 4%. But again, it's psychology. And I forecast this myself, as I just said. And as he, did become president, I think, and you see not only gold and silver, that people are like selling back or moving on or not interested in buying. Most of the retail dealers I talk to, and these are the big ones, even the wholesalers, are basically, just in dire straits. I mean, there's very little activity in the physical realm in that. You look at food storage, this emergency food for, hurricanes or, God forbid, some type of a prolonged emergency action. Those sales are well off. So basically anything across the prepper scale, across the precious metals, all that has gone very much south. It's very, very doing very poorly. Whereas the more conventional, things are great. We don't have to worry anymore. Pension's good and economy's good and, all blah, 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 continues onward. And the truth is it hasn't really changed that much. Yes, there has been some job creation. Yes, there's been a lot of repatriation of money back. That's true. And there's been, it's not all bad, but what I'm trying to be is objective about the numbers, and the numbers that the government is throwing out are as jury-rigged as they've ever been. That's my point.
David, I actually want to go back to something you said. You're just thanking Bitcoin, and it's true. I love that there's competition in the markets, and I just wanted to add something right here that I was thinking, in that last topic, and that is just thankful for the internet, the opportunity to share information. And, we saw the exposure of the lies. Just one example was the election. Everyone was so shocked that Trump won. And, there was only a few sources that were talking about the true support that he had. And I think him winning was exposure across the mainstream conventional wisdom that there's a lot of lies going on. And I'm even thankful to YouTube. As much censorship and Facebook, as much censorship, and Google that's going on, even with Alex Jones. I know Sean of the SGT report had a problem, but he came around with the uprising of the community. Thankful for that. But Alex Jones, being shut down, will disagree with him, agree with him. It's just a canary in the coal mine for what's going on. But I'm grateful for things moving forward and exposing the lies that are going on. We're talking about this morning. I think a lot more people believe that what is being reported are to be questioned, and I'm very grateful for that. So with the headline numbers and Apple going on to be the world's first $1 trillion company, people not being scared about a recession, and the last recession, such a long distant memory now. I mean, how quickly could all of this turn? Or is this such, like you described it, such a large barge, like the Titanic, that it is going to take some time for it to really start to unravel and to sink?
Well, that's a real tough one. And, I think it was Jesse Livermore. It may not be. I may be quoting. The quote's accurate. I can't remember the source. But, how did you go broke? Well, very, very slowly, then all at once. And if you think about how a ship, if you ever had a toy boat or in the bathtub, I don't know, that like if you sink a ship, whatever size, it takes on water slowly, slowly, slowly. But at the last, 3 minutes, all it takes is a little bit of water changes the mass enough to really all of a sudden, bang, it just starts going down quickly. So that's my analogy. I think we're going to see, we'll muddle on and muddle on and muddle on and muddle on until we don't anymore. And then there could be all of a sudden things change rapidly. So I think I'm not trying to weasel out the answer. It's actually how I see it. So I think most people will be blindsided by it. That's why I like the analogy. I'd rather be, 6 months too early than 6 minutes too late. Because you may be in a market where, gold looks so passe and I can get it any time and it's still under 1350. Maybe it'll break out this time. Maybe it won't, blah, 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 blah. And all of a sudden it's like, there's a big problem in the financial system and gold shoots up $100 and it's up limit and they close all futures trading because of the activity. So they stop it. So now the retail market takes off and is bid $150 that day or whatever. I'm not saying that's going to happen. I'm just using, gold as one of the things I'm the most familiar with and studying for most of my life. But that's an example. Is that going to take place? I don't know. But you asked me what I think. I think it'll be not necessarily that scenario, but that idea that it just muddles along and no one's paying attention to it. And I've got all this time and it really doesn't matter, and on and on. And all of a sudden there is a shift from whatever source. I mean, you just don't know. It could be the bond market, it could be the stock market, it could be war, it could be food, it could be water, it could be a weather event, it could be a satellite situation. I mean, who knows? But it could all of a sudden accelerate and people are going, oh man, I wish I would have bought back my gold position, or, oh, geez, I wish I would have gotten more, of this or whatever. So that's how I think it'll unfold. That's kind of what history shows us, that people are very much normalcy biased, meaning that tomorrow is going to be just like today. There's really no fear. Don't worry about it. And it always happens to the other guy, not to me. But ask that of, some of these people that have experienced these weather events or, currency crisis. I mean, you talk to anybody in Venezuela that was there for, their lives, and Venezuela was like rocking and rolling as far as their economy is concerned. And then when their great leader came in, the one that passed away, I mean, Chavez was like going to make everything even better. And it seemed to be that way for a while. But there's lots of great books that the left could read if they're so inclined, but most aren't, to really study the facts. And the facts are that something for nothing doesn't work. And that's the way the capitalistic system is set up now. Something for nothing doesn't work as well for either system, So let me be very clear about that. And this is why we have such problems today, because the left is more inclined to like, well, let's just redistribute everything for everyone, and we really don't have to work for it. And then the right, even though most won't admit it, but I will, and I'm not on the right, by the way, I'm pretty neutral. I don't like politics, but they're there. Is, what's the analysis of the monetary system? Well, the bank gets something for nothing as well. So it's either the elite get something for nothing and the rich get richer, and the 1% dictates to the rest of us what we're going to do, or you can go the other side and do what I just said. So it's really a precarious situation, and we'll just go broke really, really slowly, and all of a sudden.
David, so one of the things that we're seeing a major shift in is the market. I'm noticing many people are making the case for silver specifically, and the clean energy demand being the upward catalyst. Now, I know you're huge on silver. You're the authority. You're the silver investor. silver-investor.com. I know that's your website. So, let's talk about silver here. And I think you got some interesting things to say about it. But yeah, just to preface you here, the clean energy demand, can you share some information on that and kind of what people are talking about and, why this is so important?
Sure. And again, I want to just give you a bit of a foundation. So if you go back to about the year 2005, so back 13 years, the industrial demand for silver was 35% of the market. So 35% every year of the silver demand came from industrial uses. And that was when we were mining about 550 million ounces on an annual basis. Today, we mine about 850 million ounces on an annual basis. And the demand on the industrial side is 55% of the market. Mm-hmm. So that's something to bear in mind, Kenneth, and listeners. Wow. So silver's industrial demand has gone from 35% to 55% in roughly 15 years. And the whole time, the production has scaled up from 550 to 850 million ounces. However, all markets move on the margin, which means you need investment demand to move the price higher and higher and higher. And the investment demand has been very sluggish, as I said at the beginning of the interview. So coming to your specific, the clean energy, solar particularly, photovoltaics has been on a ramp up. It's kind of leveled off. It's starting to accelerate again. The reason, if you look back, I've done this in other interviews, so those that have heard me before, just turn off the show for 2 minutes and come back. But the projection was to be about 140 million ounces on an annual basis. We're a little over half of that. And the projection was actually very accurate. The reason that we're at half of that is because the efficiency of every ounce of silver has doubled over the last decade or so, which means that as in any market, you want to get the best performance for the least amount of cost possible so you can increase your profit margin. Mm-hmm. And that's true of photovoltaics as well as anything else. So if the efficiencies could not have been increased by double, our rate of use would be about 140 million ounces of silver. Having said that, it seemed to be accelerating again. The one that, hasn't been talked about too much, of course, I'm looking into pretty deeply, and that is, storage, this battery thing with, cobalt, lithium. Silver's probably going to be one of the better ones, but it's so expensive relative to these other metals that it's hard to determine. But there certainly could be, I say could, not would, be the availability of silver used as an energy storage type of system. But yet that, again, is to be determined. But it is a green metal. It certainly helps in water a great deal. It helps purify a lot of things. And even in the nano field, it's very much a requirement. So it's an incredibly essential metal that most people know very little about, and it's certainly very undervalued. But as far as the greenest metal out there, silver is it.
David, so it's been pretty gut wrenching to see gold go back under $1,300. I haven't checked it this morning, but it's getting awfully close to $1,200. Um, and then obviously silver is following in suit at its current level. Now, what are your thoughts on this price movement at the moment? Does it have a lot to do with what's going on with the economy? What do you attribute this to, and what do you see going forward?
Well, I mean, as a cop out, but also the most accurate answer anyone could give you. There's been more selling pressure than buying pressure, and that's driven it down. What's really upset me is that the uptrend line for gold was at 1240, and once we reached that, it was 2 years from the bottom of December 2015. So all of 2016 was a very good year for the metals. 2017, a mediocre, poor year for silver, but a good, decent year for gold. It was up year over year in 2017. And now we're halfway through 2018. So we had a 2.5 year uptrend line to the 1240 level, which was breached just 3 weeks ago.
Mm-hmm.
So that is a bad technical indicator. I don't think we're going to take out that low that was in December 2015, but I think we have some work to do. August is almost always the worst month for the metals. So if you're a contrarian, now would be the time to start looking at this sector, silver especially. And the other interesting thing is that the underlying mining shares usually lead when we are back to a bull market. What's fascinating is more of your top companies like we have in the Morgan report, the ones that really making money, the ones that most people don't pay attention to, are at levels when gold was $100 higher. So the stocks are performing as if gold was $100 higher. So they're acting as if gold is like 1,300. And so the silver stocks are acting as if silver was at like 17 or 18. So these stocks are actually kind of shrugging off this downturn that we're seeing recently. Not all of them, but the ones that are the most we're owning. And by the way, I just have to throw this in here. I mean, the Morgan report from day one has looked much more than at silver and gold stocks. I mean, we look at resource sector. We do moly. We did lithium before anybody. We did rare earth elements before anybody. I was the first one to recommend a cobalt stock. Lithium, this real story isn't out there. There's about 400 years worth of lithium on the planet. No one else will probably even tell you that. So anyway, back to you. But that's how I see it. Now's the time to get in. I think it'll firm up by the end of the year. I think 2019 will be a good year. I know I said that a year ago or something, and I'm wrong so far. And I admit it. It's hard. It's tough. I mean, you can always use it's manipulated, which it is. And I don't like to use that excuse. I like to do my analysis factoring in that it's manipulated. But I didn't really properly factor in what we talked about. How much money that was possibly going into this sector has moved into cryptocurrencies and given up on the metals altogether. And it's a much greater number than I expected it to be.
Sure. Yeah, it's a powerful thing, and it's all about being nimble, and that's one thing I appreciate about you and your analysis. And it's the only way to really approach the future. So, David, again, thanks for coming on Crush the Street. If people want to learn more about the Morgan Report, reach out to you. Please let them know what they can expect to find and how to find your work.
The best thing to do, to get it all, is just go to Google or Bing or any search engine and type in David Morgan Silver. If you don't put in silver after my name, you'll never get there from a search engine. But the really best way is just go to themorganreport.com. That's our main website, themorganreport.com, and get on our free email list. I do a podcast every week. I've got a YouTube station. I have a Twitter feed, and even a corporate, I think, Facebook presence, which I don't use. I don't even know how to log into it, but my secretary posts these interviews on our Facebook account. But the best one, I think, for people to save time is to just get on the podcast. And you can go to the main website again, themorganreport.com. There's some pull-down menus, pretty easy site to navigate, and you can get on the free email. Every weekend we put out all the stuff I've done for the week for free, which is interviews like this or any commentary, and my wrap up. I do a weekly perspective almost every week, except once in a while I'll miss because of travel commitments or whatever. So thank you for allowing me to do that, Kenneth. I do want to say, for the record, I did call every top in the silver market, especially the one in 2011 at $48. I did tell everybody, my people first, of course, they pay me, but I told them, this is it, and be prepared for a couple of years of downtrend. If you got big positions, put on a hedge, buy puts, write covered calls, do whatever you need to do. And I was wrong. I was accurate, totally right about the top and when it occurred. What I was wrong about was the duration of the bear cycle within a major bull trend. I really thought at that time that it'd be maybe 2 years in length. And of course, it's been about 6. So I stand corrected. We've had really, it's hard to argue. It depends if you look at gold or silver. Gold basically is, as I just said, was making a nice bull move for 2.5 years, and that's failed again. So kind of no man's land doesn't mean you shouldn't always keep a position of maybe 10% in the metals. I've never said put everything in the metals. I know there's people that overload in that sector. And if you're going to get into this sector, more money has been made by, the mining sector or the oil sector than anything else. But these are really tough long shots. And that's where most people spend most of their time, is these little penny micro companies, and most of them fail. You have a very, very bad chance of making big money in that sector. And this is what almost the entire industry talks about. Whereas someone like me that's been through that whole cycle once before in their life and realized the truth of the matter, decided to buy stuff that really made sense. For example, one of our main picks back in the early days is up about 900%. And the dividend, although it's only a modest like 1% right now, if you bought when I told you to buy, you're getting about a 10% dividend on the money that you invested. So, if you buy right and hold and sit tight, you can do very well in this sector. We also have opportunities. We were on Kirkland Lake, early on, and it just makes a new high and a new high and a new high and a new high. So that's when we're proud to have recommended to our subscribers. And then on the speculative side, we have something that I think is better than anything that Miriam Katusa has found. I really, really proud of the work that we've done in this particular sector. And no one knows it outside of Morgan Report subscribers. And that's good and bad. It's good because they get the opportunity first. It's bad because unless someone else sees the opportunity and recommends it, it's going to be kind of treading water for a while, which is where we're at now. An investment bank came in with a multiple $million investment into this company, and it's now selling at lower price than they funded it at. So it's really an opportunity for those that are out there that do like to speculate with money they can afford to lose, which is what I teach, into this particular sector that is basically a technology stock in the mining space. It revolves around, as you know, Kenneth, the electronic waste sector. And I think this company is going to dominate everything else out there by far. And again, we've been looking at this now for quite some time.
That's awesome, David. David, you are truly an authority and a leader, a thought leader in the sector and the investment space overall. I appreciate your knowledge, and thank you for helping us to understand market psychology and how to be better equipped to advance in our financial situation. So thanks for coming.